instability, uncertainty, volatility. This week we cover the second full week of March and discuss how mortgage interest rates can impact your monthly payments. So stay tuned. Welcome to another local market update with Rick Batista. We certainly can't predict the future, but our job is to report on what's happening locally, nationally, and globally based on actual data. And when we're talking about trends, we're looking at how things have played out historically and consistently. When it comes down to it, our job is to report on the housing market. And although there's plenty of things going on locally, nationally, and across the globe, at all times, we're looking at how it impacts our industry and, more importantly, how it could impact you directly with regard to the housing market. So I'll be sharing some information and data and insights with you in just a bit. But as always, let's start off with a fun fact. Fun facts, market time. The slower pace of home sales has helped housing supply increase at a record pace nationwide, with inventory climbing 67.8% year over year in February, according to Realtor.com's latest monthly housing market trends report. Inventory was up in 49 out of 50 of the largest U.S. metros, driven largely by increased time on market and a decrease in buyer demand due to elevated borrowing costs. February marks the sixth consecutive month the supply of homes increased, although inventory remains down compared to pre-pandemic levels. So to touch on that a little bit more, I wanted to read a quote here from Sam Cater. I hope I'm pronouncing their name correctly. Sam is the chief economist at Freddie Mac. Mortgage rates are down following an increase of more than 0.5% over 5 consecutive weeks, and we'll be covering what it is currently as of the time of this filming. Turbulence in the financial markets is putting significant downward pressure on rates, which should benefit borrowers in the short term. So although some things have been happening in the financial world and with the banks, which is scaring a few people, sometimes bad news is good news for some, right? So you may look at different sources and you'll see a slight difference in what the rates are. And we're looking at the rate for a 30-year fixed mortgage right now. This is a chart with data provided by the Mortgage News Daily. So nearly after the start of February, the rates did go up, but we do see them going down. This is certainly one of the lowest points that we've seen so far this month. And looking at the next chart, we're looking at solely this month of March. This is the second time that the rates were this low. At the time of this filming, on the 21st of March, we certainly have a little bit over a week. Let's see how things start looking as we enter the spring market. This next quote here is from Nadia Evangelou, Director of Real Estate Research at the NAR, National Association of Realtors. Following the trend of the 10-year Treasury yield, the average rate on a 30-year fixed mortgage dropped to 6.6%, so a little bit different than the 6.55 we just showed you on the chart, from 6.73%. However, rates may decrease even further in the coming weeks depending on reactions in the financial market and the outcome of the Fed's meeting next week. Please keep in mind this is a quote from last week, so the Feds are actually meeting this week. And a very important note I wanted to touch on, the Federal Reserve does not set mortgage rates. That tends to be a common misconception, but they actually set the key interest rate. And the correct terminology for that is the rate that they set is the federal funds rate. And this is the rate that banks charge to each other for very short-term loans. So even though they are not setting the mortgage rates, that federal funds rate that they do set does impact where rates are going. At least it certainly tends to. And this next chart here, not sure if I've shown this before, this is based on information and data provided by Mortgage News Daily. But this chart, using more recent interest rates, especially throughout this first part of the year, we're looking at buyer demand versus the actual rate. This chart spreads from 5.5% to 7.5%. And you can see, and we certainly have seen, working within the industry and our clients, that once we've reached that high mark of 7 and 7.5%, buyer demand has become very weak. We go into the next category from 7 down to 6.5, and it's limited demand. And then down from 6.5 to 6, good demand, and below 6, strong demand. Unfortunately, we haven't seen below 6 that much this year, but we can definitely attest to very good demand when it was between the 6 and the 6.5 mark. So hopefully that is a area that we're going to be seeing once again, especially thanks to the news of the financial markets and with spring upon us. And taking a look at that chart, I hope there's two important takeaways for you. One is we can't predict the future, but what we can do is help you make the best decision possible based on all the information and data that we have. And we really have to look at what's going on in the moment in your lives, what your goals are, what your timelines are, what your budget is. So although all this information impacts everybody in some way, it impacts each individual household differently. So we gather all the information, the data, present it to you, share it with you, discuss it with you, and then help you make the best decision possible for you. Second important takeaway is understanding that the fluctuation in rates can directly impact how affordable it is for you to buy now or in the near future. So timing the market can be very challenging because we can't predict the future, but ultimately comes down to what you need and how soon you need it. This next chart is one that we put together to give you an idea of how interest rates, higher or lower, can directly impact your bottom line. So let's take a look here. And please know that for the sake of calculations and perspective, we're using the average sales price of single-family homes throughout Chicago, and this is Chicago proper. We use the average sales price, the year-to-date average sales price, both through February of 2023 for detached single-family homes and detached single-family homes, and also taking a look back at, to kind of use a wider parameter, the average sales price year-to-date throughout the entire year of 2022 for both detached and attached single-family homes. So although you'll see on the attached charts, price differences for both year-to-date figures are not that much of a difference, they certainly are for detached homes. So that's why I wanted to use both numbers, just to show you the difference, to kind of give you a good idea of how those different prices and fluctuations in interest rates can impact you on a monthly basis. Keep in mind that the calculations are for the actual loan amount, even though you're using the average sales price, the final purchase price. We're just using these for calculations, but this would be the actual loan amount. So your loan amount would depend on how much you're putting down and closing costs, etc., etc. So take a look at these charts and feel free to reach out to us if you have any questions. You can comment below or send us a direct message, call, text, or email. Our contact information is below or in our bio. So from fun facts and insights, we go to quick facts, and we are covering information and data that's provided by the Chicago Association of Realtors for the week ending March 11th, 2023. Data is current as of yesterday, March 20th. Looking at year-over-year changes in new listings, detached market, we were down by nearly 28%, while attached down by nearly 36%. Under contract, we were down in the detached market by 16.8%, attached down by 33.3%. Homes for sale, even though we're up, this is one of the lower numbers that we've seen over the last several weeks. And as we've talked about in previous videos, even though the inventory is up, certainly a lot of inventory that buyers apparently don't want, because even though with rates up a little bit over the last few weeks, we definitely have seen that homes that are hitting the market that are priced right, priced fairly for their current condition, they still gain plenty of interest and offers, and they tend to fly off the shelves relatively quickly based on the current days on market that we have been seeing on average. But the detached market up by 6.8% year over year, detached down by 29.4%. So unpacking that a little bit more, we're looking at new listings. We wrapped up the week of March 11th with 290 in the detached market, 3-month average of 263, down by 10.6%. And the attached market, 492 with a 3-month average of 382, with the 3-month average down by 34.3%, and that is year over year. Under contract, we wrapped up the week with 232 detached single-family homes, 3-month average of 153, down by 24.1%, and the attached market 369, 3-month average of 250, a decrease year over year of 36%. Inventory of homes for sale, the detached market wrapped up the week of March 11th with 2,189, 3-month average of 2,437, up year over year by 14.7%, and the attached market 3,051, 3-month average of 3,246, down by 24%. So now that you have all this information and data, what does it mean for you? I have no idea. It all depends on what's going on in your world. So feel free to reach out to us. We are here to help, and more importantly, ready to start a conversation with you. Our contact information is below. You can call, text, or email. There's a lot of information to consider, a lot of data to look over, and certainly a lot of scary headlines. And our goal here is to bring you information, set your mind at ease, and or sort through all the murky waters so that at the end of the day, you can still make a decision. Because that's probably the scariest part. What's the best decision that you're going to make for you, your family, your household, your future? And at the end of the day, only you can make the decision, but sometimes you need a little help getting there. So that's what we're here for. Thanks again for your time. Thank you so much for watching. If you haven't already, please hit the like and subscribe button, and you can hit that little bell too. So when we put out our market updates, so whether they be weekly or monthly, you can be the first ones to watch. So until we meet again, take care of yourselves and each other. We'll catch you next week. Take care.